Georgia is recounting their votes by hand through the order of what's happening right now. Georgia Senate is up for grabs right now, January 5th. If GOP loses, they lose control of the Senate. Russia says that they have 92% effective vaccines. So in this episode and in this live show, we're going to do some updates as far as what's happening to the stimulus packages, as well as, of course, we got to look at the election. And, of course, we're going to do some Q&A about the housing crash. And we're also going to talk about what's happening, of course, what could we expect to happen when a recession comes? And are we, the Kwak brothers, are preparing for a recession, and how you should, of course, steal our tactics in terms of preparation for a recession. So, like I mentioned, guys, Daniel won't be here to join us today. It'll just be me and you. We'll be solo. Maybe Nick will join us. I don't know. From afar.
Yeah, maybe.
Yeah, maybe. Okay.
Voice of young Jamie. Here we are.
So I'm still sick, or I'm still getting out of sick. I don't feel sick. That's the difference. Is that I'm having like this throat issue where it's just like, I don't know, this buildup. It's nasty. Don't want to describe it because I'm sure some of you guys are eating right now, and I don't want to cause you guys to lose your appetite.
Well, you said you lost your. You can't really taste much right now.
I can't smell. Yeah, I can't smell. I can't taste right now. And then it was kind of sad because my wife prepared a really awesome breakfast for me this morning.
Oh no!
Couldn't taste a single thing, and I was like, oh, this sucks. This coffee too, I can't taste it. It's just I can feel the temperature. But all right, here we go. So let's get back on track. So right now, in terms of some news updates for you guys, we got the majority. I would say majority of the Democrats are furious and angry, and they're torn apart as far as what's happening with the stimulus package. A lot of the Democrat senators and Democrat congressmen and congresswomen are angry and mad at their own leaders that the $1.9 trillion of stimulus package that was created by the Problem Solver Caucus was rejected, and that instead the Democratic leaders right now want the HEROES Act, which is the $3 trillion package that was passed back in May of 2020. So a lot of the Democrat congressmen and congresswomen are urging for an immediate stimulus package that an immediate stimulus package to be passed. And of course, the holdup is, hey, the leaders are saying $3 trillion. That's the magic number. So right now, there seems to be a lot of angry Democrats, congressmen and congresswomen that are obviously urging for a smaller stimulus package to help the American people as much as possible. So there's a lot of torn arguments that's happening over there. Now, Georgia, like I mentioned, is doing a recount by hand, and Georgia is a state to pay attention to right now if you're tracking politics, and that is because January 5th is when they're going to be doing a runoff election. So if the current GOP senators lose, then the GOP loses control of the Senate. The Democrats will now control the Senate if the GOP loses. So again, the runoff election January 5th. And of course, the Republicans are urging and hoping that President Trump actually did win, because there might be an apparent election fraud. And if that's true, then of course they're counting on President Trump to help them out with the January 5th GOP if runoff election as far as the Senate for the Senate goes. So lots of news updates to come about. January 5th is a hot date that will ultimately determine who controls the Senate. If, of course, Joe Biden is declared the final and official certified winner, and if he does become the president-elect, that will make it very challenging for the Republicans to come in January 5th to have a fight as far as trying to remain control of the Senate. If not, then, of course, if the GOP loses the control of the Senate, then you got the Senate under control of the Democrats. The Congress, the House is controlled by the Democrats. And then, of course, the president, the executive office, is also controlled by a Democrat president, which is former Vice President Joe Biden. So this is why a lot of the Republicans are eyeing Georgia right now as a very important state. Of course, because if the Republicans lose that state, as far as Senate goes, then all three contributing legislative bodies of government are now under Democrat control. So that's that's pretty much what's on the table right now. Of course, we have another news that says Russia has a 92% effective vaccines after Pfizer earlier this week announced that they have a 90% effective vaccine. Of course, Russia is always trying to one off the United States, but who knows? We'll see. There was a really funny meme that I saw a couple months ago when it was a joke where if you take the Russian vaccine, you'll be just fine until you start speaking Russian, right? You start mumbling stuff in Russian that no one can really understand.
So I would love that.
That was a funny meme that I saw. Okay, so let's go over to some more relevant conversation that we have for you guys, and that is the recession. And we are anticipating even more harder of a hit in terms of recession next year, specifically gearing towards the housing market. Now, of course, a lot of you guys can argue and say, well, Sam, we're already in a recession right now. Things can't get any worse, can it? Well, next year, when the the eviction moratorium expires and mortgage forbearance programs also expire, things are not going to look pretty good. And of course, we're not out of the woods yet in terms of COVID. I mean, Illinois, at least in my home state, we're getting hit pretty hard. The governor also just mandated a couple of days ago restaurants to close again, and it's hitting the restaurants hard. It's causing a lot of the restaurant workers to, of course, lose their job and they're furloughed again. This is not good for the economy. This is not good for the general American people. There's less money circulating because less people are working, less spending is going on. Even if you have a job, even if people do have a job right now, they feel discouraged to spend, and instead they want to hoard and save money because of the uncertainty. So this is all obviously not a good thing. And I sort of anticipate this to kind of go through 2021. I think it's going to peak in December, and it will kind of slow down in January and February. But even so, with the mortgage forbearance programs ending, eviction moratorium programs ending in December 31st, 2020, without a stimulus package or without further stimulus, then obviously you can imagine that we're going to have a complete disaster come January. We're going to see a lot of people displaced. We're going to see housing market take effect of that. But even so, even without all that, Daniel and I were predicting a recession or a housing market crash in 2021. So what do you do right now to protect yourself? What do you do right now to, of course, prepare for that level of a disarray? Well, first of all, something that I preach every single time in our show, and that is start paying off your mortgage, start paying off your debt. You don't want to be holding on to debt. There's a really good business book, and a lot of you guys I know don't read business books, but there's a good business book called Good to Great, and there's also a second series which the same writer, Jim Collins, writes. I'm trying to think of all the name of the book. It's by the same author, Jim Collins. It's not Good to Great, but I got to look it up for you in a sec. But there's a book where basically it talks about, Jim Collins writes this, pretty much talks about how businesses have survived the worst of the worst when it comes to recession. They did a comparison between Kodak versus Canon. They did a comparison between Netflix and Blockbuster. Of course, Netflix had a technology and kind of that the new technology as far as replacing Blockbuster. But in terms of how well businesses survived during a recession, it came down to really two major things: how much debt the business had, and number two, how much cash reserve did the business hold on to. And this is so true even with personal individuals, right? Just because, not all of us are business owners doesn't mean that this rule doesn't apply to us. It also applies to personal level as well. So how much debt are you carrying? How much leverage do you have? And how much cash reserve do you have to be able to deploy, not only to protect yourself, but also deploy to certain opportunities that may come to acquire, of course, new businesses, to acquire assets and investments. So those are two indicators, as Jim Collins writes in his book, that pretty much gives a good indicator whether you could survive a recession or you're going to go through a pretty hard patch and you may have to go through an adverse financial situation. So I encourage you guys.
I got the book name.
Oh, you got the book name?
How the Mighty Fall.
Okay.
And Why Some Companies Never Give In. Is that it?
So it's a Jim Collins book. It's a blue cover. Is it a blue cover?
So he's got Great by Choice, How the Mighty Fall.
Right.
Built to last. Good to great.
Built to last.
Built to last. Okay.
It's a blue cover, right?
It's white. It's a white.
It's
cover.
white cover.
Yeah,
Okay.
It's a white cover.
For some reason, I thought it was a blue cover. That's weird.
Well, the book that came right before that was a blue cover. Great by choice.
Yeah. So Antonio's got it. It is built to last.
Okay.
So if you want to build a company that or build a business, whether it's for real estate investing or you want to protect your current investments, then those are the rules that I encourage you guys to follow. So first thing, pay off your debt. Pay off your mortgage as much as possible. The last thing you want is having your own home pulled underneath you, right? And you have no place to go, right? That's not the situation where you want to be in. Same thing with credit card debts as well. We get rid of credit card debt as much as possible. Credit cards are like anti-cash flow debt to hold on to. Now, I'm a huge fan of credit card when used wisely, right? And I'm not like Dave Ramsey where it goes, oh, cut off your credit cards, throw them down the deep abyss, right? That's not what I'm preaching here necessarily. When you use credit cards the right way, it could be a powerful tool, right? Points, cash back, those are all great things. But if you are holding on to a balance, if you hold on to a balance for a long period of time, credit cards are like the opposite of having a rental property, right? It just sucks money away from you. It's really bad for your cash flow. So I encourage you guys, if you have the means, start paying off your credit card as much as possible. If you have extra savings that you can throw it into credit cards. Because think about it this way. The reason why I tend to say take some of your extra savings and throw in your credit cards and your debt to eliminate it is a lot of times your savings account is only generating 0.5% at best, right? 0.5, 1%. Amex the other day, American Express, sent me a letter saying to open a savings account with them for a whopping 0.5% interest. I'm like, no, this is a joke. Come on. Come on, American Express. You can do better than that. So I don't necessarily want to focus on trying to earn money from a savings account, but I want to start saving money by eliminating these high interest credit cards that are 12, 15, 19, some 23, 25%. So by taking your same savings that you've had earning 0.5%, by throwing it into the credit card, now you just earned, or by nature of saving, 23, 25%, or whatever interest rates you would have paid on the credit card. So it's all about opportunity cost, right? Yeah, you're going to lose the ability to earn 0.5% or 0.25% in your savings account, but now you saved 25%, 20%, 19% on your credit card. So don't hold on to credit card. Yes, use credit card to make purchases, but pay it off at the end of the month. Get it down to zero. In fact, every expenditures that I do, whether it's for my business or even for my personal, I do it on my credit card. But the difference is I just use my cash from my checking account to eliminate whatever balance that I'm holding on to in my credit card. Of course, my students in our Heloc program know that, of course, you're going to dump all your money in your Heloc, and then, of course, let the Heloc average daily balance fall, and then take advantage of the credit card where you don't owe any interest for 20 to 30 days because of the grace period. So, mind you, paying off your debt, paying off your mortgage right now is the time. You don't want to be caught in a recession, or you lose a job, or your income goes down, or your assets get taken away, and you got a ton of debt that you need to address. Don't want to be in that situation. The second thing is have liquidable cash reserve. And notice I said liquidable, right? I didn't say just cash, liquidable. So what that means is that could come in the form of a life insurance cash value, right? And that's something that we have talked about here in our YouTube channel. By building up your cash value, you can liquidate it, take money out whenever you need it for emergencies, borrow against your cash value. Phenomenal strategy. Or having a Heloc helps you be liquid, right? Having a Heloc allows you to pull the money whenever you want and be able to use it for emergencies. Now, I know some of you guys might be saying, well, Sam, doesn't that sound counterintuitive? You just said to pay off your mortgage or pay off your debt. Why do we need to have a Heloc? Well, if you guys understand our strategy of using a Heloc to pay down your mortgage, you throw all of your money into the Heloc so that you get the average daily balance down as much as possible, right? Getting that down is a key priority, because that means less average daily balance equals less amount of interest that you'll pay on the home equity line of credit. So you'll expedite the payoff on your mortgage, you'll expedite the payoff on the HELOC. But in a dire and emergency situation, when all of your savings and income is in your home equity line of credit, you do need to take it out for emergencies, right? You know, if you lose your job or your income during a recession, then I think it's totally acceptable to be able to take some money out to cover your expenses so that you still have money for, you know, gas, food, groceries, you know, you got to survive. So yes, it's one step back, but it's a heck of a lot better than having a foreclosure or having to file bankruptcy or not feeding yourself or not putting food on the table. So yes, does it increase debt a little bit? Yes. Is it way better than going to foreclosure? Absolutely. So that's one of the things I say, have liquidable asset or liquidable instrument that's going to give you access to cash during hard times. Now, looking at positive side, if you have liquidable asset or liquidable instrument, such as a HELOC or life insurance cash value, or just cash, okay, then during these hard times, you're going to be able to buy rental properties, a couple pennies on the dollar, right? You're going to be able to buy rental properties for extremely, extremely cheap. And this is great because you get to buy really low and you know, generate rental income, and your return on investment is going to be significantly higher than, you know, had you bought it in a different time. So that's the key to recession proofing yourself and protecting yourself. Of course, cut down expenses, go lean, right? This means that you may not get to dine at a 5-star restaurant every day, right? Go lean, cut back a little bit, cut down on the debt, and prepare for the worst. And if I'm totally wrong, even if I'm totally wrong, right? There's no recession next year. There's no market crash next year. You still have some reserve. You know, you're still going to have reserves. You're still going to be in a good place. You're going to be in a great position, and you're going to be agile, meaning that whatever happens to the economy, you can move very quickly, right? You can dodge the bullet, so to speak, like Matrix. So you want to be in that position. You want to be agile. You want to be flexible. You want to be able to buy when you need to. You need to sell when you need to. That's the key. You got to be mobile when it comes to the 21st century finance. The old way would have been, yeah, you got to be more rigid. You got to be hardened in your position. But I think a lot of the psychology for money has changed. You got to be more mobile. You got to be flexible. You got to be agile, quick, and because things are changing so quick now these days. Your money also has to change. You know, money strategy has to also change very quickly. All right. So with that being said, let's go and tackle some conversation. I do see the chat box coming in. Sang Jung is saying good morning. Good morning to you. Antonio says hello from California. Yep. Good morning and hello. All right, guys. So like I mentioned, with the recession coming along, there's a huge buying opportunity. I sense it, even if I'm totally wrong. Right? If I'm totally wrong, that's good because we're not in a recession and everyone will be doing well. So with that being said, guys, yeah, Leaf is saying interest rates are creeping up. Time to lock in the HELOC. Yeah, there is a way of locking your HELOC rate as well. Not all banks will do it. Not all banks will allow you to do that. There are banks where you can actually fix the rate on your home equity line of credit, right? There's a way of locking that thing down. There's too many people that think, oh, HELOCs are all variable. They're all high and, you know, it's not worth it. And that's not necessarily true. There are HELOCs, just like any other banking products, that vary. And of course, you know, you can lock your HELOC rate and there are HELOCs actually that some of our clients found that are cheaper than even a 30-year conventional mortgage. And I know some of you guys are saying, oh, that's impossible, right? No, there is a way of getting HELOCs that are cheaper rates than 30-year conventional. You just got to know where to go, okay? All right, so that being said, I am going to actually end this show short because we are in preparation for our 2 p.m. live HELOC training that's happening today, 2 p.m. live HELOC training, and you can find the registration link in our community tab. In fact, I'm going to actually have Nick in just a couple of seconds put that in the comment section so that you can go ahead and registered. But in that training, we're going to cover it deep. We're going to go deep into how does the strategy work? How do you use a HELOC to pay off your mortgage? I'm going to show you some proof. I'm going to show you some testimonials, success stories of people who have used the HELOC to pay off their mortgage even quickly. You're going to be able to see that. And I'm going to show you, I'm going to answer some questions, some what if questions, like, hey, what happens if there's a recession? I know I briefly alluded to that earlier, but what if there's a recession? What if I make inconsistent income? Some of you guys may get paid commissions instead of regular W-2 payroll. So we're going to address a lot of those questions. And of course, we're going to talk about how you can get further help from my team and from myself. That's happening at 2 p.m. Central Time. acceleratorbanking.com/live. Yep, that's the one. So go and register for that. It's not too late. We do have a 500-person cap. So after 500 people, we can't host. So that is open for you guys. Go register, learn how you can go and pay off your mortgage. We've been talking about it as a way to protect yourself from a recession. So don't hold yourself back from that. Go and prepare for the training. Okay. So Leaf is asking, what is your feeling on 2021 real estate? My strategy is to pile up cash and get ready. Yeah. So right now, Daniel and I are doing a lot to raise capital. We're doing a lot to, of course, create partnerships. We're doing a lot to create businesses, and we're doing a lot to also research areas and look at markets that we believe are great potential for investments. Right now, Daniel and I, we stopped buying little deals. Some of you guys may wonder why. Well, why aren't you guys buying real estate? Well, we stopped buying little deals so that we can get ready to buy these big multifamily, couple hundred units. That's what we're buying for. So we used to buy, 4 units, 5 units, 10 units, 30 units. Those are great. I'm not knocking on those, but we've come to a place where we've needed to graduate to 100 units, 200 units, 300 unit apartment complexes. That's what excites us, right? That's what gets us up in the morning, gets us here in the office, and it motivates us to work to where we want to go. So that's where we're going. And of course, to take down these 100 units, 200 unit, 300 deals, we got to have partners. We got to have money partners and investors that invest in our business. So that's what we're doing right now. That's where our heads are. That's where our mindset is. So that's what we're working on right now. Hey, Nick, is it just me, or does the stream look really blurry?
It's I was watching a different podcast this morning, and they were having the same issues with connection.
Interesting. So I think it might be YouTube, because yesterday YouTube was down. I don't know if you guys noticed. YouTube yesterday was the YouTube app was down, I think.
Yeah.
It was
they were saying that same thing for them, and they're a big podcast too, so they're having the same connection issues.
So yeah, it's very interesting as far as I'm seeing blur. It looks like we're back in 2002 trying to watch.
We're filming on a potato.
Yeah, it looks like we're back in 2002 trying to watch FIFA World Cup with VOD.
Yeah, right.
92 kilobytes per second. When you had to plug your modem into the phone jack.
Oh my god!
And went.
And then 30 seconds of video.
Yeah, and then your mom would yell at you like, "I need to take a phone call," and everyone in the house couldn't take a phone call because you were playing.
Over it. You could still hear them through the modem.
Right, because you were playing RuneScape. Good old days. All right, so Leaf is asking, are you going there because of the market or your desire? Yeah, we're going there because of our desire. We've noticed that in order to scale, in order to be more bulletproof, you got to scale, man. I mean, you look at Walmart, right? You look at Walmart versus a local grocery corner store, right? In an event where there is a recession or hard times, which store will close first? Well, clearly the local small shop will be the first to go. Walmart can stay alive because of the scale of economy. I mean, they have a thick plate of armor. If they can get hit with all kinds of recessionary, bullets, and they will still survive because they have this just behemoth amount of cash and reserves, assets that they can sit on and be protected. So that's what we're trying to do here with the Kwak brothers. Is we want to be able to protect ourselves. We want to be able to be so big that even a slight economic problem won't hurt us. Now, do I personally enjoy buying, fixing and flipping them, buying 4 units? Yes, I absolutely love it. I mean, this whole buying 100 units, 200 unit thing, it's exciting, but the process is really boring, really boring. But buying, the single family, 4 unit, 5 unit, it's fun. The process is fun, but obviously it's not very profitable. And that's something I've learned is in a business is sometimes profitable things are not as fun, right? Profitable things are not as exciting and it doesn't have that pizzazz, right? A lot of times big money does involve in a boring process. And that's something I've learned over the last 5 years being in business. Sometimes you gotta be in that discipline of doing boring stuff so that you can get to the bigger profit margins and bigger scale. But I have found myself enjoying that process of growing a business. But anyways, my personal take, I love buying for single family, 4 unit, 5 units. It's just more enjoyable, more process driven, but less profits, right? There's just less money to be made because you gotta do that iteration multiple times before you can match to what you could potentially make on a 100 unit or 200 unit deal. Okay. Leaf is saying, are you owning or syndication? This is going to be a private equity fund. So this is a 506C, I believe, that we've structured. So this is a 506. So we got to go register ourselves with SEC, and it's a whole process. So it's not necessarily a syndication. It's more so a private equity company. So we pull money together, and then we, as a company, we go decide what we want to invest and buy, and then whenever there's an earning in dividends, we pay that out to our investors. So, okay. All right. Let's see. A couple more questions here. Yeah, Leaf is saying November 11, 2020, 4:33 Pacific time, YouTube experienced widespread technical problems playing videos. Yeah, so there's a lot of tech issue going on right now with YouTube. Leaf is also asking, what are you doing with the rest of your portfolio? So right now, Daniel and I are contemplating whether if we want to sell our portfolio or just keep them. I don't mind keeping them. In fact, I actually don't mind just as a hobby buying single families on the side on top of doing my syndication deals, or I should say my private equity deals. So I mean, I may just do that just for my, or what I would do. This is a better idea, and this is a little moment that actually we can transition to. We can transition to the fact that you can buy single family properties inside of HSA. HSA stands for Health Savings Account. Health Savings Account is a tax deferrable account where if you contribute, let's say, $5,000 or $6,000 into your HSA, and I believe the limit is $5,500-ish. I believe I got to check the IRS website, but the maximum contribution that you can make, I believe, on an HSA, a health savings account, is $5,500. Now, with that contribution, you can invest in gold, you can invest in silver, you can invest in stocks, mutual funds, etc. Right? But that HSA could also invest into real estate. So you can use the money in your HSA to buy real estate, and any profit or any income that is earned on a rental property inside of the HSA, you can use that to cover any medical bills. You can use that to cover, your kids' braces. You can use that to cover surgeries or medical emergencies. So that might be something that I do as a side thing to cover all my future medical expenses. So instead of relying so much on, healthcare and insurance and expensive healthcare system, that's going to be a system that I set up for myself and my family, so that I got these smaller rental properties, single family, 4 units and 5 units, paying for all my medical expenses moving in the future, all tax-free. And that's what the IRS has set up for us to do. And I might do that. I might do the same thing when it comes to my self-directed IRA. You can set up a self-directed IRA, invest in real estate. All the income is tax-free, which is great. If you sell the real estate and any capital gains, all tax-free. So there's a lot of tax and legal structuring that you can do to, of course, avoid taxes legally and reap the benefits of of some of these investments that you can make. So that's planning on what I'm doing as far as these smaller real estate deals in the future. Okay. All right. Leaf is asking, what financial institutions do you prefer and use? Bank, credit unions, others? Same question for commercial financing. Good question. Are you asking when buying real estate? Because when I buy real estate, I prefer to buy real estate on owner financing, seller financing, which if you don't know what seller financing is, it's a concept where you and the seller directly negotiate an arrangement to where you make monthly payments to the seller. In exchange, the seller gives you ownership right of the property. So the bank and any third-party financial companies are out of the picture. So I don't have to get bank loans. I don't have to get hard money loans. I don't have to do any of that. It's just directly me and the seller negotiating an arrangement to make that happen. So that's something that I prefer, honestly. Doesn't affect my DTI, doesn't affect my credit score. I think it's way better in terms of structuring your financing, has very little, I guess, a kickback or very little consequences in terms of my credit if let's say I default on that arrangement. So that's what I prefer when it comes to buying rental properties. Would banks still freeze your HELOCs if your LTV is below 80%? Would you possibly take out HELOC funds and put it into savings to prepare to buy good deals? So I think you mean LTV is above 80%. Banks typically won't care, depending on, of course, which banks you go to, but they won't care as long as the LTV is below 90%. If your LTV exceeds 90%, then the banks start to go, okay, we got to keep an eye on this guy here because he's way too much, he's way too much leveraged. He's tapped out. So again, I would say keep your HELOC or any debt LTV when it comes to your real estate below 70% at all times. So what I would do is, if you are using a HELOC to pay off your mortgage as much as possible, use it to get it down below 70%. Of course, the lower the better, because that's less debt on your asset. Get it down as much as possible. And then if you are planning to use that same HELOC to buy rental properties or to go buy other businesses or assets, then don't go more than the 70% threshold, because any more than 70%, you put yourself at a risk where you could be underwater in case your property value drops. Okay. And I wouldn't necessarily take the money out of the HELOC, because now the moment that you take the money out of the HELOC and put it somewhere else, then the HELOC interest is cooking off, right? You're owing interest on the HELOC. So I would rather keep the money in the HELOC, just keep it there so that you don't owe any interest. Because if you try to do what you're trying to do as far as taking the money out of the HELOC and putting it in a savings account, HELOC's charging you anywhere 5% interest. Your savings account is earning you 0.25, 0.5%. So it's completely backwards, right? It's costing you money to park the funds out of the HELOC in your savings account. Don't want to do that. Instead, it should be the other way around, right? You want to take your savings and put it in the HELOC, because your HELOC is charging you 3 to 5% interest. Your savings account is only earning you 0.25%. You get it? So by taking your money, that opportunity cost, and putting it in a HELOC, now you're saving 3 to 5% interest rather than focusing on earning 0.25%. So it's a much better in terms of just straight looking at it from a more of a numerical standpoint. Again, depends on your situation, depending on what you want to accomplish, but that's something I would do just from the perspective of what saves you more money. Okay. All right. Okay, so I'm going to go wrap up the show early because I do need to prepare for our 2 p.m. Central Time HELOC training. But I will tackle one more question, and then we'll go ahead and wrap up the show. We will have another show for you guys tomorrow. Now, a little quick announcements before we kind of end the show. We are going to, around Thanksgiving time, we're going to go and discontinue doing a live show every day. But instead, we're going to go probably do more of a weekly show, a weekly live show for you guys. And provide recorded content. So what we'll most likely do is we'll do a Friday live show as a way to kind of close out the week. And then Mondays and Wednesdays, we'll have a recorded content for you guys. I actually have a video that I'm going to create titled, "Why I'm Paying My Daughter $12,000." You guys want to... You guys want to hear about that? Why I'm paying my, so by the way, my daughter, she's 10 months old. Okay. She's barely saying mom and dad. She barely stands right now. Why in the world would I be paying her $12,000? Anyone want to take a guess? She's my employee. Close. That's pretty close. Leaf is pretty close. So I'll share with you guys as to why I'm paying my daughter $12,000. And I'll probably end up paying her $12,000 again next year, depending on how the law changes. But guarded baby. That's hilarious. No, it's not a guarded baby. So I'm planning on paying her $12,000. And I'll share exactly why through a recorded video. Hopefully by then, when I record this whole thing will be gone. You can tell I'm sick a little bit. So I'm going to share with you guys why. I'm also going to show you an investment that's paying me 300% return on investment. You guys curious on what that is?
I am.
Yeah, Nick's curious about what that is. Anyone curious how I'm getting 300% return on my money? So this is actually one of the reasons why I don't invest my money in stocks. I don't invest money in stocks for this reason. Because every dollar that I put into this, I get $3 back. Okay. No, it's not crypto. Crypto is actually really volatile, so I don't invest in crypto. No, it's not crypto. It's not stocks. It's not mutual funds. It's not robbing the bank. Okay, just put that out of the picture.
Money counterfeiting.
Yeah, money counterfeit. It's not that. No, it's not buying a money printing machine either. Okay. No, that's not. It's not it. There's a legitimate way for me. Actually, sometimes I earn 400% return on investment. And I'll show you how that works. So is it 300% guarantee? Well, so far, it's looking like it. The data is showing me I'm getting 300% return on my investment pretty consistently here. So I'll show you guys what that is. And if you guys want to see what that is, subscribe to our channel because we are going to record what I'm doing. I'll show you my screen. I'll show exactly what I'm doing. So if you want to see that content, how I'm earning 300% return on my investment on every dollar that I put into this thing, and then I'll show you why I'm paying my daughter $12,000. Those are all interesting topics. So go ahead and subscribe to our channel. It really helps us a lot. We do this YouTube channel. We do these YouTube videos only to benefit you. We want to show you how you can make more money. Okay, that's the goal. I want to show you guys how to make more money. Okay, trust this advice from an Asian guy. Okay, we do okay in America. We got the dry cleaning stores, restaurants. Nick over there is dying right now.
So bad,
we control your dry cleaning for a reason. Okay, all right. We know what clothes you wear for a reason. Okay, and there's secrets in there. I'm just kidding, guys. I don't mean to blur out all these racist jokes. Okay, please YouTube. All right, don't ban us. But seriously, take it from an Asian guy. We know something about money. So that's the goal. I want to help you guys make more money. I want to help you guys succeed with personal finance. We want to provide news and updates that's going to help you protect yourselves from losing your money. It's one thing to make money, but it's another thing to protect yourself and protect that money. So with that being said, subscribe, smash the like button, help us out with our YouTube algorithm. We would sincerely appreciate all of that. Leaf is saying money is blood. Need both. Yeah. So money's a serious thing, right? We need it. Robert's asking, will the Heloc training be on YouTube? No, it's going to be on Zoom. So you should be getting an email from me as soon as you register. It's a Zoom room. If you've been on a Heloc training on Zoom before, it's a different Zoom room. So definitely be mindful of that. So it will not be on YouTube. It's going to be on a Zoom training. So go register, acceleratedbanking.com/live. Again, that's acceleratedbanking.com/live. Nick's working on putting the link up on the comment section. If you guys don't register right now. Go learn how to pay off your mortgage faster using a home equity line of credit. I'll be there at 2 p.m. Central. So that's about 2 hours and 20 minutes from now. So I have the email, but never done a Zoom. I'm at work, so it'll be difficult for me. So I'll just put in a headphone, right, and listen to it. And we will be doing this every other week. So if you miss it this time, we'll do it again in 2 weeks. Again, just a reminder, we'll discontinue doing lives every day around Christmas, not Christmas, Thanksgiving, we'll go back to recorded content, but we'll provide a weekly live show where we do some Q&As, updates as far as what's happening, and so on. All right, guys, love and appreciate all of you guys. I hope you guys don't get what I got because I lost sense of smell. I lost sense of taste. I think I have COVID. I haven't gotten tested yet. My brother got tested. And so don't get what I got. Stay healthy, stay safe. Eat some good food, strengthen your immune system, and hope to see you guys well. So that being said, I'll see you guys tomorrow night or tomorrow morning. And for those who are registered, I'll see you guys in about 2 hours. All right. See you guys.